Mr. Warren Buffett, the owner and CEO of Berkshire Hathaway, is one of the richest men in the world. More importantly, he is also the greatest and world's best long-term value investor of our lifetime. Do you know what $1,000 invested in 1964, when Warren Buffett took over Berkshire Hathaway, at just $19 a share, is worth today? Guess. Guess again. You are right. A lot and a whole lot. $1,000 invested in Berkshire Hathaway in 1964 at $19 a share would be worth a whopping $21.8 million today, based on the $415,457 price of the Berkshire Hathaway stock at the time of this video. The Oracle of Omaha, like he is called, has given tremendous investing advice over the years that videos cannot do justice to, no matter how long or short they are. But today, we will talk about 10 of his advices and quotes that are most relevant today. After studying him, reading articles about him, and watching the HBO documentary, here are some of his advices and quotes that we consider prime advice from Warren Buffett to young and new investors. Thanks for taking time in your busy schedule to join us here on Wealth Listicles, a channel where we research and list anything real estate, stocks, and everything personal finance, so we can further learn it, try it, build wealth, give, and impress our future selves. In this video, we are giving you Warren Buffett's top advice for young and new investors. So let's get right to it. Number 11. Warren Buffett said, Rule 1. Never lose money. Rule 2. Never forget rule number 1. Warren Buffett lost about $23 billion during the 2008 financial crisis. His company temporarily lost its AAA rating, so he has also lost a lot of his own money through his impressive investing career. Considering it all, his number one investment rule remains to never lose money. In other words, don't gamble with investments or be frivolous. You should go into any investment with the mind to never lose. We can take it a step further and say he is saying don't invest in business with bad fundamentals or deteriorating balance sheet. So how do you prevent yourself from losing money? Perform strong due diligence on the company you invest in. Research the company, and when you think you've done enough research, do it again. After all, this is your hard-earned money. Number 10. Be fearful when everyone is greedy, and be greedy when others are fearful. Even though he said this in 1987, the quote's relevance is very prevalent in today's pandemic. When he said this, he was referring to the two diseases in the stock market: fear and greed. So how do you stay fearful when others are greedy and greedy when others are fearful in the stock market? The best simple way to do this is to think long-term and look for opportunities in the down market. Like in the game of chess, after strong due diligence, you just have to be patient and calculative while seeking value in the stock market like Warren Buffett. Number 9. Never invest in businesses you don't understand. In other words, invest in what you know. Scrutinize the company and its subsidiaries and make sure you understand what they do, and how they generate their income, and how much of that income they use for operations. Warren Buffett looks for strong key indicators, precisely companies with strong economic moat. That's why he said, I look for something that gives them a moat around it. Look for what the company does to stay competitive, and make sure what they do is somewhat unique enough that their future profit is protected to some degree. Understanding the economic moat of a company you're interested in is a step in the right direction. We can invert and further what Warren Buffett said by saying, invest in what you know and understand. Warren Buffett follows this rule, true to form, by his early investments in simple, understandable American favorite brands such as Coca-Cola, Dairy Queen, and Fruit of the Loom. Number 8. Avoid emotions in investments. Like Warren said in his HBO documentary, if you're emotional about stocks, you're not going to do well. Essentially, don't put emotion in it. Imagine putting emotions in the stock market in the last 2 years of this pandemic. Warren Buffett goes on to say, you may have all these feelings about the stock has no feelings about you. By avoiding emotions in investments, one can easily navigate around bad timings, bull and bear markets like we've seen in the last year and recent months. Also, it is important to understand market volatility. In other words, understand that the market will always go up and sometimes it will go down. Number 7. Dividend stocks. As you may know, Warren Buffett not only built his wealth through acquiring other companies, his wealth also came from dividend-paying stocks. In addition to that, like he said, he attributes his success also to living in America, some lucky genes, and the power of compound interest. Because we are pro-dividend stocks here on Wealth Listicles, we will talk briefly about Warren Buffett and dividend stocks. He loves dividend stocks so much that his affinity for it cannot be emphasized enough. He has always gone by the idea that companies that pay a dividend are almost always profitable and typically have time-tested business models. This explains why he has made an approximately $4.6 billion in dividend to date. Ask yourself, why won't I invest in a company that values its investors so much to want to give them quarterly or monthly dividends from their profits? Just like Warren Buffett, you just have to love the idea of reliable and constantly growing dividends. Remember, your growth stock may appreciate, yes, but you can't do anything with that appreciation unless you sell the underlying stock, right? That's why dividend-paying stock is more appealing to us, because you can physically see the payment, no matter how small, in your brokerage account and use it to buy more shares. You don't yet know how we love dividend stock. Just wait and see all the amazing dividend stocks videos we have planned for you in the coming weeks. Number 6. Buy a stock to hold it forever. This is one thing we've learned from Warren Buffett. Yes. Here are Wealth Listicles. We are not only a buy and hold investor in the stock market, we are also a buy and hold investor in the real estate market. Just like Warren Buffett said, if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. In the United States, the tax gets better when you hold stocks or real estate for a long time as opposed to buying to flip it quickly for quick profit. This is one of the reasons why Warren Buffett goes on to say, our favorite holding period is forever. In addition, if you have dividend reinvestment turned on, you'd be amazed when the power of compound interest 10x your net worth. Before we continue, we hope you've gotten some valuable tips so far. If you like these types of videos, kindly like this one and consider subscribing to encourage us, and it will help the channel a great deal. And if you're new, welcome. Let's move on. Number 5. Know the difference between price and value. Warren Buffett is the king of value investing, so it is normal that he has a good quote about value investing. He is also big on knowing the intrinsic value of the stock you want to invest in. It is always good to buy the stock low if it ever trades below this intrinsic value. You must have heard his famous quote that says, "Price is what you pay. Value is what you get." In other words, our focus as investors should more on high-quality companies trading today at reasonable price. And add the idea of growing dividend for some more income. He also said, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. In other words, be a value investor by enforcing your value screening matrix. Number 4. Buy low-cost index funds. There are so many ways that investors lose money. They either try to time the market or try some other trading strategy they don't know and fully understand. In order to avoid this, for most investors, Warren Buffett always suggests low-cost index funds. Warren Buffett said, by periodically investing in index funds, the know-nothing investor can actually outperform most investment professionals. He goes on and says, paradoxically, when dumb money acknowledges its limitations, it ceases to be dumb. Warren Buffett has practiced the strategy of investing 10% in short-term government bonds and 90% in a very low-cost S&P index fund. He is a big believer that this strategy will be superior to those attained by most investors. Number 3. Marry the right person. Contrary to how you think this is not relevant to success, I agree with him on this. On this one, Warren Buffett talks about unconditional love, and how that trumps our race after money. Warren Buffett attributes this as his greatest decision of all time. Marrying someone who is on the same page with your goals, objectives, and aspirations is priceless, and makes a whole world of difference. In a conversation with Bill Gates in 2017, Warren Buffett said, "You want to associate with people who are the kind of person you'd like to be, then you move in that direction, and the most important person by far in that respect is your spouse. Choose a spouse or partner that understands your goals and aspirations when it comes to personal finance and wealth building through investments." Number 2. Invest in yourself. In 2019, Warren Buffett told the Yahoo Finance editor-in-chief, Andy Serwer, and said, "By far the best investment you can make is in yourself." Warren Buffett is not just talking about education here. He is also emphasizing one of the most important things in life, which is taking care of one's health. Here at Wealth Listicle, we believe so much in the saying that health is wealth. It is when we are healthy that we can embark on a promising journey of building wealth. The investing in oneself that he is alluding to here is your health first, and then financial education by way of reading and taking classes. Warren Buffett also suggested improving one's communication and leadership skill. Number 1. Giving. Warren Buffett is one of the most generous people in the world. To date, he has given out billions to different foundations and programs that needs it. If we take anything from this video, it should be that giving to the needy should be part of our life and part of our wealth building journey. Like Warren Buffett calls his act of giving, he calls it his easiest deed in the world. As of summer of 2021, Warren Buffett was halfway through giving away his $100 billion fortune. The pledge to give away 99% of his Berkshire Hathaway was made in 2006. As you can see, some of these advice are practical and simple tips in investing and way of like it should really be. Taking some of these advice from the great Warren Buffett should change your portfolio, your life, and your wealth building journey. Thank you for watching this video till the end. Don't forget to like, share and subscribe. Don't forget to hit the notification bell so you know when we post another interesting finance video. Until next time.